Hey everyone, welcome back to my channel Grow with Joe. This is Jyoti Sharma, and in today's video we are going to talk about things we need to focus on before we actually start investing. So the first and foremost thing you need to focus on is you need to track your expenses. You need to know where exactly you're spending your money, because until and unless you know your spending pattern, you can't make changes in it. So once you know your spending pattern, we'll make required changes to it. Now, why do you have to track your expenses? This will give you the liberty to spend even more lavishly, yet save much more than what you're currently saving. The second thing we need to focus on is buying a term plan and a health insurance for you. Now, most of you must be confused that she was telling that we are going to discuss about things we need to do before we start investing. But buying an insurance is an investment, right? No, it is not. Many of you have this confusion that buying insurance is an investment. Definitely not. This is the worst decision you can ever take in your personal finance, because insurance are not an investment. I know most of you would have heard about this ULIP plan. So this is basically insurance plus investment plan, where they kind of tell you, even if everything goes well, towards the end of the lock-in period, we'll give you a certain amount, and they show you all sorts of calculation, and at the end they make you believe that you're going to get a very big amount towards the end. But trust me, that's a scam. They might make you believe that buying a ULIP could be one of the best decision you can ever take, but please do not fall for it. I'll tell you why. I'll make a detailed video on it, on why not to buy a ULIP plan. Going back to the topic, insurance. So you definitely have to get insurance for you and your family. Now, which one to get for you and which one for your other family members? That's the next question. So you need to know the difference between the term plan and health insurance. So term plan is something you need to buy only for the earning members of your family. Why? Because term plan is something that's the purest and the simplest form of insurance which you can get at the most affordable rates. Okay, so in this term plan, the nominee gets paid in case of death of the person who's insured during the policy duration. You need not buy term plans for the kids of your family or for the people who are not earning. So the non-earning members can have a health insurance, but there's no actual requirement to buy term plan for them. Health insurance is something you need to buy for each and every member of your family. This health insurance will back you up during your tough times, and it will actually take care of all your bills at the hospital, and you need not touch your savings or your investments just to pay the hospital bills. So never ever ignore buying a health insurance just to save some ₹1,000. You can get a very good health insurance at just a premium of ₹1,000. How to select your health insurance, that I will tell you in a separate video, okay, because there are many factors you need to check before buying an health insurance. So I would definitely recommend you to have some around your 6 months salary, or if you're not a salaried person, then at least your 6 months expenses. So whatever is your day-to-day expenses, you should be in a position to take care of it for the next 6 months, even if you don't have a job. So that's the sole purpose of having this emergency fund. So now that you know what are the things you need to do before investing, next question is, how much should I invest? So I can give you one thumb rule which can help you in figuring out how much you should be investing. So there's this 50 30 20 rule. So basically you spend your 50% of your salary on your basic needs. So when I say basic needs, it's obviously food, shelter, and your travel expenses, your kids school fees, and whatever, like everything that comes in your day-to-day needs, that has to be filled by 50% of your salary. Next 30% you will spend on your wants, because living in your present is really important. So make sure that you use 30% of your salary to be happy. I mean, whatever makes you happy, do that. Traveling, go travel. Shopping, do that. 30% is for your wants. 20% is what you got to invest. Okay, so now this 50, 30 and 20 rule might not exactly fit into your salary structure. So this is just to get an idea, a little bit plus or minus should do good. Now the last and the most important thing is sit and discuss your finance with your family members. Whatever you're buying, this term insurance, health insurance, your emergency fund, your family members need to know where exactly it is parked, so that in case of emergencies they can access this money. I mean, if they don't even know about it, then how are they going to get the benefits of this, right? So you need to sit and discuss all these things with your family members. Keep them posted where you're parking your money. I'll see you in my next video. Till then, stay tuned, stay happy.